Hello and welcome to episode 74 of the Craving Crypto podcast. Today's episode, I'm going to be teaching you how to backtest the crypto markets. So let's get right into this. Before we jump into the backtesting, I'm going to go ahead and do the standard market overview for crypto, starting with the total market cap here. We are still pushing up towards this major resistance in the total market cap. Things are looking really good for the bulls currently. If we can get above this major resistance right here, I would suspect that we start to test some of our previous support levels that have failed, such as the 180 billion range. So we're just watching for a breakout of this major resistance. We are testing the resistance right now, so I wouldn't be surprised if we get a little bit of a rejection over the next couple days, but that still doesn't destroy the kind of reversal pattern that we're seeing here and the potential double bottom, the Adam and Eve double bottom pattern. So again, it's going to be about getting above this major resistance level and seeing how we react to the rejection of this current resistance point. But if we do get above, we're going to shoot for these previous support levels that are now resistance. One thing that I wanted to point out is this huge downtrending support that we have really since we tested the 618 in the first major sell-off of this correction that we've seen in the crypto space. So this major support trend line is acting as a downward pointing support, and we'll just have to see if it continues to hold. The other thing is we just keep seeing that the 88% retracement is showing support. So that's a key Fibonacci level to be watching over the next few weeks with Bitcoin. That's around 103 billion in total market cap. Another thing that is really good to see is the volume back up into the $30+ billion range. We haven't seen volume this high really during this whole period here after we had the bull trap in May. We've just continually seen downtrending movement from there on. So as that volume comes back in, that's a good sign for the big picture in the crypto space. So let's check out our top mover for the day. IOST is showing some signs of strength on the shorter time frames here. If we go into the 2-hour, we can see a huge pump that occurred over the past couple days. This coin is up 13% today. On the short term, I don't really see this as being too sustainable, and these lower support levels are likely to be tested again. So definitely not one that I would be buying at current price, unless maybe you're playing the big picture on IOST and you're accumulating in the bigger cycle. Then you might be looking to add small amounts down here. You guys, Bitcoin being digital gold is getting really exciting in the big picture cycle though. Just as far as market psychology goes, the same people that were buying significant portions up here are going to be the same people selling significant portions down here and down at this level here. And the reason for that is just because the psychology of the market. As you guys know, there's about 10% of the market that can win, and then we've got the other 90% of the market that ends up losing money. So you want to be on the side of the winners, and the side of the winners are going to see that this is a huge opportunity, a huge financial opportunity. If you take your percentage tool from the peak down, and you start to see that an 83% drop in value is actually an undervalued asset currently. And that is what the difference between the 90% right here and the 10% is. The 10% is thinking logically about the cycle, and the 90% is getting overhyped and overexcited. Now, of course, we're all going to experience some level of emotion in the markets. It's just natural for you to feel something. During this period right here, you have an emotional reaction to the amount of money coming into the market. It's an exciting time. But when everything is really excited is when I started getting scared, and that's why I started putting my sell orders along up here on Bitcoin. I did have one that was a bit higher that we never reached, but those sell orders are really important when everybody else is excited. Now, the buy orders are just as important when everybody else is scared. So make sure that you guys have some buy orders down here at support, maybe another one down here at these lower support levels that we've seen in case we do have another drop. Either way, thinking in terms of the percentage down from the peak is the most important part for finding undervalued assets and investing in them. And that's why I show the Fibonacci tool over and over and talk about the big picture cycle and these Fibonacci levels. And the reason for that is because we've seen continuously in the stock market and in multiple markets around the world where you have this market cycle occur, they often retrace down to these lower Fibonacci support levels, and that's where you see the smart money coming in, the big banks, the people with a lot of wealth to purchase with, and that's when the volume starts coming back in as well. Okay, so back testing. This was actually requested by one of my viewers, so I'm going to show how to back test a trading strategy in a market so that you can see if your trading plan is going to work. Now, I will say that back testing isn't going to always give you the exact same win rate that you might get when you're actually applying the trading strategy. So for example, if I have a trading strategy and I go back test it and I get a 65% win rate back testing, when I actually use it in the market, you might drop closer to 60 or maybe 58% of the time. And so the real thing here is to understand that back testing is an important tool that you should always be doing to check your strategies and your trading plans, but actually forward test your strategies and trading plans once you've back tested them so you can see what the actualized win rate is. So for example, if I have a strategy based on downtrending resistance breakouts, I can go back in the history of Bitcoin and see how many times it worked to draw a downtrending resistance line and buy the breakout. So let's go over here to the 2014 cycle. We'll just take a line here and draw the resistance points, connect all the resistance points. And as you can see, when we had the breakout of those resistance points, the downtrending resistance line, we started a new trend on the upside. So that would have given you a really early signal on Bitcoin before the next bull run came. Now let's go see if that worked in any of the previous cycles as well. We've got this cycle right here. Take our trend line. We've got a huge downtrending resistance point right here. And as you can see, we got a breakout of that downtrending resistance, and it took us all the way up to the $1,200 range, just a little bit below it. Now here's one of the first cycles in Bitcoin. This is when it went from a penny up to $31. We can just take this same line right here and draw a downward pointing resistance zone. And as you can see from that breakout, we've had a nice uptrend formed that took us all the way up to the 266 level. So let's go over to the cycle that we see today. We've got this huge drop at the start. If you notice that often you get the huge drop, these wicks up here, same with up here, that huge top. So you actually start drawing your downtrending resistance a little bit below that. So I would start with Bitcoin drawing downtrending resistance right here, currently in this cycle. And then if you play this strategy, you would be buying as soon as this downtrending resistance point is broken above. That would be your signal to get back into the market. So that's having a certain trading strategy that you either figure out or you see, and then going back into the chart and testing to see if it actually works in the market. And then once you've tested to see how accurate that strategy is, you can take it and you can start applying it to your trading and your investing. Now, with Bitcoin, the downtrending resistance line is a very working strategy, and I've done this with altcoins in the past. I do recommend keeping your strategies as simple as possible. Don't overcomplicate things. Just find the simple little things in the market where you see correlations and connections between things that happen, like breakouts of downtrending resistance, or for example with the MACD on the really big time frames such as the weekly time frames, you get these very, very clear cross. This was a huge MACD cross, and it was overextended significantly at the top. We can even go back to the 2014 cycle and see the exact same thing happened. Extremely overextended MACD, and then you had a bearish cross, and that was right here near the top of the market. And then what happened? It came down and then did a false cross right here. This is really a false cross because first of all, it's in the center of the MACD, which is showing you that it could easily go more down and more oversold. And then second of all, it had a cross right after it. So this was a fake buy signal essentially. But it did give you a little bit of upside during that period of time before the bear cross happened again about right here. And then you get the real bullish cross down here when it's actually in the negatives below the center of the histogram. So what's happening again on the MACD? Well, we're down below the histogram. We had a similar kind of scenario happen here. We didn't get this was kind of a false cross, but it was really just an extremely low volatility range. So the lines connected together for a second. And then you got one more extension down into the significantly negative MACD zone. And this is looking like we could have some buying to come here. So that's an early signal in Bitcoin, and that's how you can back test that strategy. You could even go back to this mini cycle right here that happened, and you'll see very clearly that the MACD crossed right here. This was near the top of the market, and then you got a bullish cross down here near the bottom of the market. The MACD works better on bigger time frames, and you can add it by just clicking on indicators and typing in MACD right here, and it'll drop down on your chart. It's a very useful tool, one of my favorites. So I hope that gives you guys some clarity on back testing, keeping things simple, and watching for these things in the market that give you very strong, significant signals. Again, I recommend using the bigger time frames and focusing on the simplest strategies that you can find. Go ahead and follow me on Twitter and Instagram and Snapchat. My Snapchat is Sear Games, and then my Twitter is @HighAltitudeINV. You guys can get more consistent updates, some funny memes, and parts of my daily life. So check out those social media links. Anyways, it's been good. I will see you guys in the next video. And as always, stay profitable out there.